inflation is remaining stubbornly high, which if you go back 6-12 months ago, I told you this. I gave you this game plan. The Fed was saying transitory a couple years ago. I said, nope, won't be transitory. And I said, inflation will come down from 9% because it's easy. You fix the supply curve, you fix the supply chain, you bring it down. What's going to be harder to fix is the fact that the retail worker, the average worker, is now making, instead of $12 an hour, they're making $20 or $25 an hour. That has to be passed through to the consumer. Now, an individual business can't pass that through overnight, right? I mean, imagine you go and you want to buy a lollipop, and instead of it being $1, it's $5. That's not going to happen. So what are they going to do? They're going to raise it from $1 to $1.05, and then the next year $1.10, and then the next year $1.20, and so forth and so on. So that's the way it's going to play out, which is going to keep inflation stubbornly high for at least the next year. That means the Fed is not cutting rates. The economy is already showing signs of stress, all right? By the way, I've heard this from businesses now. Businesses are now focusing on their employees and saying, okay, what have you done for me lately? And some of you guys may be watching and saying, you know what, this is exactly what's happening at my company, where all of a sudden the numbers, it didn't matter before. When everything was great, no one checked up on you. Everyone was like, hey, listen, the company's making more money than it's ever made. No need to check up on you. But now things are starting to get tight. They're starting to say, okay, who's the top producers? Who are the people not producing? We need to start to look at this. And that is what's happening now. It's the beginning stages of a recession.
Bitcoin tested $27,000 on May 31st as weakness prevailed into the monthly close. As early week excitement faded, traders and analysts warned that now was a make-or-break point for the short-term trend. Crucial area approaching here for Bitcoin and dipped into it, Michael van de Poppe, founder and CEO of trading firm 8, summarized. If this zone sustains as support and Bitcoin will be able to reclaim $27,500, everything looks like we'll continue the upwards trend. Drop beneath $26,600 and we'll see new lows. Hello and welcome to Money Talks. In today's video, Gareth Soloway believes that we are currently still in the bear market for Bitcoin and it will go further down. He also covers the future of the debt ceiling and the Fed next moves on the interest rate.
Bitcoin, again, you guys know I've been steadfast. I think personally 30,500 is the short-term top. I still am not convinced we're out of the bear market yet. I think that people that say we're out of the bear market are slightly jaded by hopes and dreams. I look at the charts. As long as we haven't taken out 30,500 and stayed above it, I'm in the camp that this is still going to come back down. All right, we did fall back there. We fell below it, okay? Now, notice how as we broke down over the weekend, number one, volume was light. Number two, it was a risk-on period because of the AI bubble and the AI craze. We went right back to that trend line on the charts, and then we pulled back here. Now, again, what I'm watching for is, do we take out 25,870? That is the lowest point in the last couple weeks. Two hits, one here and one here, okay? If we take that out, then you drop likely down just below 24,000. 24,000 is your short-term target. Now, let's be clear. I'm a trader, all right? I have a short signal out in verified investing crypto. With Bitcoin, we're in the money. We're in the money on the Ethereum short. I would probably be covering my short right in this area, okay? I might even flip it to a long for a quick trade. But a reminder out there, I'm telling you again what I likely will do, and number two is that I'm a short-term trader. So if I do decide to go long around 23,500, 23,007, then I would look for a bounce and I would exit. Because again, being a trader, you can be short-term bearish but still take longs, and you can be long-term bullish and still take shorts. Like, it doesn't matter. You're trading the levels. You're trading probabilities. And by the way, the most freeing thing in the world is to trade inside of bigger cycles. So many people are like, oh, I'm only long or this or that. Okay, I'm okay with that. Again, especially for people that can't study charts, but there is a wealth of information that the charts give you that essentially can help you make money in bull markets, in bear markets, even when you're going counter trend. Even going long in a bear market, even going short in a bull market.
BlackRock CEO Lawrence Fink believes the recent drama around the United States debt ceiling has deteriorated global trust in the US dollar, something that other analysts predict could provide some tailwinds for Bitcoin. Fink's comments came as the U.S. House of Representatives on May 31st passed a highly anticipated bill to lift the $31.4 trillion debt ceiling. The bill now goes to the Senate, which is expected to spend a few days debating it. The U.S. Treasury has indicated that the deadline for raising the debt ceiling was June 5th. Any later, the country could begin defaulting on its debts. According to a May 31st report by Reuters, Fink told the attendees of a Deutsche Bank Financial Services conference that he expects at least 2 more interest rate hikes from the Federal Reserve in the coming months, claiming that he'd seen no evidence of overall inflation being reduced. "I believe we'll have a resolution, but let's be clear, the United States is jeopardizing its reserve currency status." Many Bitcoin advocates and cryptocurrency investors see BTC as a hedge against inflation and debt fears brought on by central banks increasing overall monetary supply. The debt ceiling deal once again highlights Bitcoin's utility because it's essentially a break away from the traditional financial system. Given its finite supply, it's free from the issues that the U.S. government is facing right now. Typically, when central banks raise interest rates, investors choose to take their money out of risky assets like cryptocurrencies and growth stocks. Given Bitcoin was so depressed in 2022, the expectations of this high interest rate environment changing saw investors take an opportunity to buy Bitcoin at heavy drawdowns. Rate hike expectations have changed significantly so far this year and in the last few weeks.
Now, the NASDAQ has had a nasty run, an incredible run just over the last couple weeks, right? AI, all the AI stocks, including even ones that, are ancillary ones like Microsoft and other ones, they've been running. Apple's not that far away from an all-time high. One of the things I want to show you, and this is one of those mind-blowing things, I want to show you, so number one, let's take a look at some trend lines on the Qs. All right, so this is the QQQ, the NASDAQ 100. This houses the Googles, the Microsofts, the Metas, the Apples, the NVIDIAs, all of these, right? So what I want us to do is take a trend line from this top of the shoulder down to this shoulder here, extend it out, right? Wow, look at that. Okay, so we have a trend line that coexists right there. Now, what about this pivot area right here? Take a trend line, stretch it out. Now we hit that. Okay, now let's take another trend line right through these lows and put it right there. So again, look at this. Pivot low right here to this pivot high. They're all three coexisting right here. Now, as if that's not even enough, check this out, guys. And this is where you get the smile on my face when you get multiple factors. Let's do a Fibonacci retrace. Many of you guys know Fib. I'm a big fan of the Fibs because anything that occurs naturally in nature, if you look again, and I've said this before, but the petals on a flower, Fibonacci sequence, the rings on a tree, Fibonacci sequence. If it occurs in nature, there's some impact on us. We are part of a bigger world. It is generally going to be important. So let's just see. What happens if we take the all-time high to the October lows? Where is that Fib retrace? Well, would you look at that? A 618 to the penny, essentially, is where we're currently trading on the NASDAQ. Now, listen, does it mean that the fact that we have 4 factors here, does it mean that we can't go higher? No, we could. Right? Factors, and this is what I want everyone to understand. The factors of a chart are probabilities. The more factors, the higher probability. All right, now, you can get probabilities to 99%, and there's still a 1% chance it doesn't work out. In the case of 4 factors like this, I would say there's about an 85% chance that the NASDAQ will start to correct and pull back. Now, the question is it going to be a big pullback, a little pullback? What is it going to be? I would say there's a decent chance that this is the high of the bounce cycle.
So is it a good time to invest in Bitcoin? And what's your prediction for Bitcoin in 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.